All right. Welcome, everyone. My name is Caleb Mills, and this is Trusted Academy. Let's see. I am. Okay, so I'll just give a brief overview of what we've went over the past few days. We started out with the introduction to the unincorporated business trust, and then trustees and governance, and then we went into legal structure and property ownership. And today we are going into beneficiaries and enjoyment. Okay. In this lesson, we take a closer look at the essential relationship between a business trust and its beneficiaries, focusing on how the trust secures their rights while maintaining proper structural integrity. Beneficiaries are the individuals who ultimately enjoy the economic benefits of trust property, yet they are intentionally kept separate from the control and management of the trust. This separation preserves the lawful design of the trust and safeguards privacy, while ensuring beneficiaries receive what they are entitled to. The lesson is built around four guiding provisions. Article 9, Beneficial Enjoyment, explains how trustees authorize distributions and how beneficiaries may receive their share of profits, including special provisions for minors. Article 10, Administration Expenses, outlines which expenses may be lawfully paid from trust funds, ensuring proper management without overreach. Article 11, Trust Accounting, details the record-keeping obligations of trustees as well as the inspection rights of beneficiaries to maintain transparency. And Article 12, Trust Bond, clarifies why no trustee bond is required in an unincorporated business trust, reinforcing efficiency and cost effectiveness. By the end of this lesson, you'll understand how the trust balances protection, transparency, and enjoyment for the beneficiaries while leaving managerial responsibilities solely with trustees. This creates a harmonious framework that secures both the privacy of the trust and the fair treatment of its beneficiaries. Beneficiaries and enjoyment. This lesson covers beneficiaries' rights and their economic benefits and protections that ensure privacy, security, and separation of ownership, control, and enjoyment. Introduction. At the heart of every trust are its beneficiaries, the individuals or entities who are entitled to receive the economic benefits of the trust property. These benefits may include income, profits, or other distributions arising from the assets held within the trust. In the case of an unincorporated business trust, beneficiaries are intentionally separated from direct control or management of the trust. This separation is vital because it ensures that beneficiaries can enjoy the fruits of the trust property without interfering in the responsibilities of trustees. Instead, trustees carry the duty of administering the trust and under their direction, guided by the trust declaration that beneficiaries receive distributions. To make the system function effectively, the trust must also establish clear administrative rules. These rules govern not only how beneficiaries receive enjoyment, but also how the trust handles its own operating costs, financial accountability, and trustee responsibilities. Together, these provisions maintain fairness, efficiency, and transparency, while also offering protections to both beneficiaries and trustees. This lesson will explore four interconnected articles that define these principles in detail. Article 9, Beneficial Enjoyment. The rights of the beneficiaries to distributions and how enjoyment is structured. Article 10, Administration Expenses. The framework for covering costs and expenses from trust funds. Article 11, Trust Accounting. Record keeping, reporting, and inspection rights to maintain accountability. Article 12, Trust Bond. The role or absence of trustee bonds in a UBOT and why they are not required. Together, these articles illustrate how a UBOT carefully balances beneficiary enjoyment, trustee responsibility, and administrative fairness within its unique legal structure. Learning objectives. By the end of this lesson, you'll be able to explain how beneficial enjoyment works for the trust beneficiaries. 2. Identify the types of administrative expenses a trust is permitted to pay. 3. Understand the system of trust accounting and reporting. 4. Recognize why trustees are not required to provide a trust bond and what this means in practice. 5. Appreciate how these provisions ensure a balance between beneficiary rights and trustee responsibilities. Article 9, Beneficial Enjoyment. Meaning and importance. Beneficial enjoyment represents one of the most fundamental principles of a business trust. It is the right of beneficiaries to share in the economic benefits that arise from the trust property, whether in the form of income distributions or other trustee-approved benefits. In an unincorporated business trust, this right is clearly separated from management and control. Beneficiaries are not required to engage in the daily operations of the trust, nor do they possess authority to dictate its activities. Instead, they are positioned to enjoy the wealth or advantages generated by the trust, while leaving all decision-making, risk management, and asset protection to the trustees. This separation ensures the long-term preservation of trust assets, while also protecting the trust against disruption from personal demands or conflicting interest among beneficiaries. In short, beneficial enjoyment provides access to benefits without the burden of control, maintaining harmony between trustees' authority and beneficiaries' interests. Role of trustees. In a UBOT, the Board of Trustees functions as the exclusive governing body that has the power to authorize distributions or other forms of enjoyment. This system is intentional and serves several important purposes. Prevents interference. Beneficiaries cannot influence or override trustee decisions regarding daily management. Protects trust stability. Distributions cannot be forced outside the framework of the trust declaration. Ensures accountability. Trustees carry the duty of protecting and administering trust assets responsibly. The trustee's role is protective rather than exploitative. They are entrusted with safeguarding property, determining when distributions are suitable, and balancing two often competing goals: sustaining the trust for long-term growth and meeting the present needs of beneficiaries. Forms of enjoyment. Beneficiaries may receive enjoyment in several distinct forms, but always under the discretion and authorization of trustees. Income distributions. This is the most common form, representing profits earned from trust property or operations. It can include rental income from real estate, dividends from stock holdings, business profits, or interest payments. Trustees evaluate earnings and decide how much, if any, should be distributed as income to beneficiaries. Corpus principal distributions. Unlike income, corpus distributions involve allocating the principal property of the trust itself. This may occur in a cash form, such as selling property and distributing proceeds, or in kind, directly transferring trust-owned assets like real estate, equipment, or shares. These distributions are less frequent, as they reduce the overall asset base of the trust and are usually authorized only when circumstances justify allocation. Other benefits. Beneficial enjoyment may also take non-monetary forms. Trustees may authorize beneficiaries to make use of trust property or resources. For example, a beneficiary may be permitted to reside in a trust-owned property. A beneficiary may be given access to a trust-owned vehicle, land, or equipment for personal or business use. Certain trust resources may be shared temporarily, provided this does not compromise the trust's long-term integrity. These varied forms of enjoyment highlight the flexibility of a UBOT, showing that benefits are not limited to cash payments, but can extend to practical use of trust property when deemed appropriate. Very, very helpful information right there. Special provisions for minors and practical example. One of the notable strengths of a UBOT lies in its efficiency in handling distributions to minors. Unlike traditional trusts that often require court approval, trustees in a UBOT are empowered to make direct payments to the minor personally for their immediate benefit or to the minor's legal guardian. This process eliminates the need for expensive and time-consuming court intervention, allowing the trust to function more smoothly while ensuring that a minor beneficiary's welfare is properly considered. For instance, imagine the trust earns $50,000 in an annual income during a given year. After careful review of the accounts and an assessment of the trust's sustainability, the trustees may authorize distributions of $10,000 to each of the 5 beneficiaries. If one of these beneficiaries happens to be a minor, the trustees can efficiently direct the funds to the child or their guardian without delay or court involvement. It is crucial to note, however, that beneficiaries, whether adults or minors, cannot demand payments simply because income exists. Trustees serve as the protective governing body, weighing factors such as timing, fairness, and long-term sustainability before authorizing any release of funds. This ensures that the distributions provide present enjoyment while also safeguarding the future strength and stability of the trust. Beneficiary rights and limitations. Beneficiary rights. Beneficiaries of an unincorporated business trust, UBOT, are uniquely positioned. They are granted specific rights that allow them to enjoy the financial fruits and practical benefits of the trust property, yet they are deliberately kept separate from the responsibilities of management. The structure ensures that beneficiaries can receive distributions, exercise limited oversight, and in some cases transfer their beneficial interest without being burdened with the risks, liabilities, or complexities of administration by clearly separating enjoyment from control. The U-bot safeguards both the long-term stability of the trust and the protection of those who benefit from it. Right to enjoyment. Beneficiaries are entitled to receive distributions of income or property as formally declared by the trustees. This ensures they share in the economic benefits of the trust. Right to inspect records. Under Article 11, Trust Accounting, beneficiaries may review trust records and accounts, providing them with transparency and oversight of trustee actions. Right to notice. Beneficiaries are entitled to receive notice of certain trust actions, such as significant decisions that may affect distributions or trust operations. Transferability of interest. In some cases, a beneficiary's units of beneficial interest may be transferred, sold, or assigned, but only in compliance with the specific rules of the trust declaration. These rights provide beneficiaries with access, oversight, and potential flexibility, while still keeping the trust overall management in the hands of trustees. While beneficiaries do have rights, they are also subject to clear limitations that preserve their structure and independence of the U-bot. No legal title. Beneficiaries hold no direct legal ownership of the trust assets. The property belongs to the trust, not to them individually. No right to demand partition. Beneficiaries cannot force the sale, division, or partition of trust property, which ensures the assets remain intact and managed collectively. No management authority. Beneficiaries have no role in decision-making related to business operations or management. That power is vested solely in the trustees. These limitations prevent beneficiaries from disrupting the trust or undermining its unified structure. Reason for limitations. The restrictions placed on beneficiaries are not meant to deprive them of authority, but to protect both the trust and the beneficiaries themselves. Preservation of independence. By keeping enjoyment of benefits separate from control of assets, the trust operates as an independent entity with its own governing body, the Board of Trustees. This ensures that the trust is not fractured by conflicting beneficiary demands and can pursue its objectives with long-term consistency and stability. Legal protection. Beneficiaries are shielded from being legally treated as partners, shareholders, or owners under statutory law. If beneficiaries were given direct control, they could inadvertently assume legal obligations, tax liabilities, or fiduciary responsibilities. The U-bot structure avoids this by ensuring that trustees alone carry the responsibility of governance, leaving beneficiaries free to simply enjoy their entitlements. Creditor protection. Because beneficiaries hold only a right of enjoyment and not legal title to trust assets, their personal creditors cannot lay claim to the property of the trust. This means that if a beneficiary experiences financial difficulty, their debts cannot threaten or diminish the trust estate. In effect, the trust assets remain insulated and preserved for the benefit of all beneficiaries collectively. Together, these safeguards highlight why a U-bot is deliberately structured to divide beneficial rights from managerial authority. This separation not only strengthens the integrity and longevity of the trust but also protects beneficiaries from legal, financial, and operational risk that would otherwise burden them. Key takeaway: beneficiaries of an unincorporated business trust are positioned to enjoy the benefits of the trust without carrying the burdens of management or ownership. They are entitled to receive distributions, access records for transparency, and in some cases transfer their units of beneficial interest. These rights give them a fair share of the trust value and accountability in its administration. However, their role is intentionally limited. They do not hold legal title to the trust assets. They cannot interfere in day-to-day management, and they are shielded from being treated as business partners or owners under statutory law. Just as importantly, they are protected from exposing trust property to their personal creditors, since the trust estate remains separate and independent. This careful division between enjoyment and control ensures that the U-bot functions as a secure, autonomous, and enduring legal arrangement. Beneficiaries gain the fruits of the trust while trustees maintain authority, creating a system that promotes fairness, protection, and long-term stability for all involved. Article 10, Administration Expenses. Meaning and importance. Administration expenses are the necessary cost incurred in the day-to-day operation, upkeep, and protection of the trust estate. These expenses ensure that the trust property remains productive, well-maintained, and legally compliant. Without provisions for covering these costs, the trust would struggle to preserve its assets and generate income for beneficiaries. In an unincorporated business trust, U-bot, such expenses are carefully regulated within the trust declaration to ensure proper financial discipline. Trustees are given authority to allocate funds for legitimate expenses, but they must always act in the boundaries of their fiduciary responsibility. This framework keeps the trust self-sustaining. The trust estate pays for its own cost through its income of corpus while protecting beneficiaries from being personally liable for operational obligations. By structuring expenses this way, the U-bot reinforces its role as an independent legal arrangement, shielding beneficiaries from the financial risks associated with property ownership or business management, yet still allowing them to enjoy the benefits once expenses are settled. Authorized expenses include: the trust declaration establishes clear guidelines for what counts as legitimate administration expenses. This ensures that trustees can maintain the trust estate responsibly while also preventing misuse of funds. The following categories represent expenses that may be lawfully paid from trust income or corpus. Excuse me. Compensation. Trustees, managers, caretakers, and other individuals who provide valuable services to the trust are entitled to fair compensation. This not only rewards their effort, but also encourages accountability and professionalism in the management of trust affairs. A well compensated trustee or manager is more likely to act diligently and in the best interest of the trust. Property maintenance. Assets held by the trust must be preserved if they are to generate ongoing value. Routine costs such as cleaning, repairs, utilities, landscaping, and general upkeep ensure that trust property, whether it is real estate, equipment, or other holdings, remains functional, safe, and profitable. Neglecting these expenses could diminish the trust income producing neglecting these expenses could diminish the trust income producing ability and reduce overall value for the beneficiaries. Taxes and fees. Like any property owner or business operator, the trust must comply with government obligations. This includes paying property taxes, license fees, permits, and other statutory charges. Covering these costs from the trust funds keeps the trust in a good legal standing and prevents penalties or legal disputes that could threaten the trust estate. Insurance. To protect the trust from unforeseen risks, trustees may purchase insurance policies such as liability coverage, property insurance, fire or casualty protection, or other risk mitigation instruments. These policies serve as a financial safeguard, ensuring that unexpected losses or liabilities do not compromise the trust estate or reduce the benefits available to beneficiaries. Professional services. Certain specialized functions require the expertise of professionals such as attorneys, accountants, or consultants. For example, legal counsel may be needed for drafting contracts or resolving disputes, while accountants ensure accurate financial reporting and compliance with tax requirements. Paying for these services directly from the trust funds allows the trust to operate smoothly and with expert guidance. Together, these categories form the core operating expenses of a UBOT. They are not optional luxuries, but essential costs that keep the trust active, compliant, and financially sound. By authorizing these expenditures, the trust declaration ensures that trustees have the tools and resources necessary to protect the estate and generate ongoing benefits for the beneficiaries. Trust funds only. The key principle in an unincorporated business trust, UBOT, is that all administration expenses must be paid exclusively from trust funds, either from the trust income or, when necessary, from its corpus principal. This ensures the trust remains financially self-contained and independent. Trustees are therefore bound by clear restrictions. They cannot use their own personal funds to cover trust expenses. They cannot compel beneficiaries to contribute additional money or cover costs out of pocket. This framework is designed to protect beneficiaries from being treated as direct owners or partners, which could otherwise expose them to liabilities. It also reinforces the trust's legal and financial independence as a separate entity. For example, suppose the trust owns an apartment building that generates steady rental income. All costs for repairs, insurance premiums, utilities, and property taxes must be paid directly from the rental income or from the trust reserves. At no point can trustees demand that beneficiaries personally cover these expenses. Once the trust has met its obligations, Any remaining income may then be considered for distribution to the beneficiaries. This approach keeps the trust estate self-supporting, while allowing beneficiaries to simply enjoy distributions as authorized by trustees. By separating financial responsibility from beneficiary enjoyment, the UBOT preserves fairness, independence, and protection for all parties involved. Article 11, Trust Accounting. Trustee record-keeping obligations. Trustees carry the responsibility of maintaining complete and accurate books of account for the trust. These records must include all receipts, disbursements, property records, and minutes of trustee meetings, such documentation ensures that every financial movement and decision related to the trust estate is properly recorded. This obligation is not merely procedural, it provides a foundation of accountability and transparency within the UBOT, protecting both trustees and beneficiaries. By keeping meticulous records, trustees demonstrate that they are fulfilling their fiduciary duties in accordance with the trust declaration. Delegation. While trustees hold the ultimate duty to maintain records, they are not required to perform the technical accounting work themselves. Trustees may hire professional bookkeepers or accountants to manage trust accounts and prepare financial statements. This delegation offers two advantages. It ensures a higher degree of accuracy and professionalism in the records. It reduces the administrative burden on trustees, allowing them to focus on governance and strategic decisions. By leveraging expert services, the trust can operate more efficiently while still upholding high standards of record keeping. Beneficiaries hold a right to inspect trust records, but this right is carefully balanced to protect privacy and efficiency. Under Article 11, beneficiaries may request access to records at reasonable times, provided they give written notice. However, trustees are not obligated to produce automatic annual reports or routine updates unless specifically requested in writing. This prevents the trust from becoming bogged down in unnecessary bureaucracy, while still ensuring that beneficiaries can exercise oversight when needed. Trustee discretion in accounting. Trustees are granted considerable discretion in how trust accounts are maintained and classified. For example, they may decide what constitutes income versus principal corpus, establish reserves for depreciation, protecting long-term asset value, apportion expenses between income accounts and principal accounts, depending on the nature of the costs. This discretion provides trustees with the flexibility to manage the trust finances in a way that best serves the current and future interest of the beneficiaries. Practical example and key point. Suppose the trust incurs a $10,000 roof repair on a property it owns. Trustees may choose to classify it as capital expense, charging it against the principal account rather than deducting it from the annual income. This decision directly impacts how much income remains available for distribution to beneficiaries. By exercising such judgment, Trustees ensure expenses are handled in a way that preserves both the integrity of the trust property and the long-term sustainability of beneficiary distributions. This illustrates the broader principle of trust accounting in a UBOT. It is designed for flexibility, privacy, and efficiency, not rigid, bureaucratic reporting. Trustees retain discretion in financial management. Beneficiaries maintain oversight rights through inspection, and the trust operates independently, balancing accountability with operational freedom. Article 12, Trust Bond. Traditional requirement in court-supervised trusts. In statutory, court-supervised trusts, trustees are often required to post a bond, a type of financial guarantee or insurance policy that protects beneficiaries against losses caused by trustee misconduct, negligence, or fraud. If a trustee were to mismanage assets or engage in dishonest activity, the bond provides a safety net for beneficiaries to recover damages. Does that sound familiar? Whenever you go to court and you have to pay a bond, you're the beneficiary. You're not supposed to be acting as the trustee. That's illegal, and you're kind of committing two crimes at the same time. I would very highly consider stepping into the private and getting away from that before they magically turn the tables on you one day and say, look what you've been doing. Now your ass is going to jail for a long time. And you won't be able to do nothing about it because you didn't take time to read the law. Which is what if you are a religious person, or if you read the Bible, you would know that we need to know and understand the law. So we'll get back into this. While this requirement offers protection, it also creates challenges. Bonds can be costly to obtain, especially for large estates, and may reduce the funds available for beneficiaries. In addition, the process of arranging, monitoring, and renewing bonds involves court oversight, which can lead to delays, bureaucracy, and reduced privacy. Ultimately, while bonds provide security, they also make the trust more dependent on statutory procedures. UBOT approach. In an unincorporated business trust, the approach is fundamentally different. Trustees are not required to post a bond or obtain court approval before administrating the trust estate. Instead, no oath, bond, or surety is required. Trustees exercise authorities solely under the Declaration of Trust, the founding contract of the UBOT. The system functions entirely on a private, contract-based foundation, avoiding reliance on external court supervision. This design highlights the UBOT's commitment to independence and privacy. Trustees are trusted to fulfill their fiduciary duties without the added expense and interference of statutory bond requirements. Purpose of no bond requirement. The absence of a bond requirement in a UBOT is intentional and serves several important purposes. Preserves privacy. Trust administration remains private and contractual, avoiding the public exposure to filings or oversight that comes with court-supervised trust. Reduces cost. Bonds can be very expensive, consuming resources that would otherwise benefit beneficiaries. By eliminating this requirement, more value is retained within the trust estate. Reinforces independence. By placing authority on the Declaration of Trust, the UBOT affirms its autonomy. Rather than relying on statutory courts, The trust is governed by its private legal framework, emphasizing freedom from unnecessarily state intrusion. Practical example. Consider a traditional probate court trust, where a trustee may be required to post a bond worth $100,000 before gaining authority to handle estate assets. This process could involve significant expense, paperwork, and court delays, all of which reduce efficiency and increase costs for the estate. By contrast, in a U-Bot, trustees assume their roles under the Declaration of Trust without posting bonds, taking oaths, or seeking external approval. This approach saves both time and money, while allowing trustees to administer the trust efficiently and privately. The declaration itself sets the rules, ensuring trustees remain accountable without external interference. Balancing enjoyment expenses and accountability. Bringing it all together, a balanced framework. The 4 articles explored in this lesson demonstrate how an unincorporated business trust creates a carefully balanced framework, one that aligns with the rights of beneficiaries with the duties and responsibilities of trustees, rather than giving one side unchecked authority. The U-Bot model distributes roles in a way that preserves stability, promotes fairness, and safeguards the trust's independence. Each article contributes something essential. 1 ensures beneficiaries enjoy the trust property without interfering in management. Another guarantees expenses are covered fairly from trust funds. A third provides accountability and oversight without unnecessary bureaucracy, and the last eliminates costly external requirements like bonds. These provisions form a self-sustaining system that protects assets, ensures proper management, and delivers value to beneficiaries, all while keeping administration private and efficient. Article 9, Beneficial Enjoyment, ensures beneficiaries receive fair enjoyment of trust property, but always through trustee authorization. This prevents interference in management while still granting beneficiaries the rewards of the trust. Article 10 guarantees that all costs of maintaining and operating the trust are covered internally, using trust funds, so neither trustees nor beneficiaries are personally burdened. Article 11, Trust Accounting, provides accountability through record keeping and inspection rights, while maintaining efficiency, privacy, and trustee discretion in financial management. Article 12, Trust Bond, removes unnecessary external interference such as bonds or court supervision, affirming the U-Bot's contract-based governance and cost-effective independence. Taken together, these provisions ensure that the trust remains self-sustaining, efficient, and private, while also safeguarding the rights of beneficiaries. The balance between enjoyment, expenses, and accountability is what allows the U-Bot to function as a secure and enduring structure, one that generates benefits without exposing beneficiaries to unnecessary risks or liabilities. Why they matter? Without this balance, a trust could either collapse under beneficiary demands or become burdened with excessive external controls. By combining enjoyment, accountability, cost efficiency, and independence, the U-Bot structure ensures long-term sustainability. Beneficiaries get the rewards they are entitled to, while trustees maintain the freedom to manage effectively, keeping the trust both secure and enduring. Summary: Beneficiaries and Enjoyment. Article 9 ensures beneficiaries receive distributions only through trustee authority. Article 10 outlines what administration expenses can be paid from trust funds. Article 11 provides a framework for trust accounting, balancing transparency with trustee discretion. Article 12 eliminates the need for trustee bonds, reducing external interference and expense. Together, these provisions protect beneficiary rights through fair distributions, oversight access, and liability shielding, while empowering trustees with authority to manage expenses and records efficiently. This balance preserves trust independence, allowing a UBOT to operate privately and sustainably without reliance on external court supervision. Coming up next, in the next lesson, will be charitable and duration provisions. You'll discover how trust can serve charitable purposes and the rules that define their duration, ensuring compliance, longevity, and meaningful impact. All right. That concludes today's lesson. Thank you again for your time and attention. Again, my name is Caleb Mills, and this is Trusted Academy. So if you would like to get a hold of me, please reach out to it'd be luxtrust1985 at gmail.com. So it's LUX Trust, TRUST, 1985 at gmail.com. I have been telling you guys to use an email address, Caleb at trustedacademy.net. I had just set this up and I didn't realize I've got something messed up and I've got to fix that email address. So if you've tried contacting me and it says that the account isn't active, that's why. I've got to get something corrected here, hopefully sometime today. Or you can send a text, or you can try to give me a call. My business number is 618-313-1860. I would love to hear from anybody that wants to know more about status correction, how to step into the private, how to become private. I'll also be teaching about the secured party creditor process, as well as continued education with trust formation, more specifically the UBOT, the Unincorporated Business Trust. And it will be complete, show you how to get the business addresses in states that don't have state income tax, and how to properly record that in your declaration of trust instead of registering it with the state. And once you register with the state, then basically you have to go by their rules, not the rules in your articles. So that's why it's very important for any small business owner. I'd say 99% of you are doing it the wrong way, and you believe that you're a citizen whenever you're not. You're the true sovereign, and you have rights. And if you stand on those rights, they will be respected because it's a covenant between you and God, and they cannot take that away from you. They'll definitely lie and do things and try to force you into compliance, but as long as you stand on your faith like the Bible tells you to, you'll be okay. And you know, if it was your time to go out of this world, it was your time. There ain't nothing you can do about it. So thanks again for being here today, and we'll see you tomorrow. Bye.